Well, good evening, everybody. Welcome to our second in our programme of live webinars. First of all, I just want to say I wish you and your families and all your loved ones still remain fit and well in these changing and unprecedented times. We've been asked to give as much information to our clients as possible to help them on their investment journeys, and tonight is part of that. I'm hearing from clients, from friends, from family about how at the moment they're really taking stock of their lives, taking stock of what's important to them, and as part of that, really reviewing how we interact with each other, how we're working, and also looking at how the effects we're having on the greater world are equally having an impact, and people are really trying to take stock of where they are with that. We're also looking at what gives us the greatest pleasure at the moment. As you can see, going to a decent barber's would probably not be too bad for me at the same time. So reviewing the world and the impacts we have on it has never been greater, and the considerations of investing with an environmental, social and governance background, again, has become really important for clients, and we think it dovetails quite nicely with the world that we find ourselves in today. So tonight, I'd like to welcome Dominic Smith from Rowan Dartington. Dominic is an investment specialist who has got over 30 years experience in UK and international markets. And tonight, Dominic is going to really discuss how it's possible to invest responsibly. Again, we would welcome feedback from yourselves on our social media channels, or indeed at info@the-Morpeth practice. So if you've got any points or feedback, please do get in contact. So over to you, Dominic. Good evening. How are you?
Good evening. Very well. How are you, James?
Yeah, very good. Thank you. Very good.
Good. I'll press on if that's okay.
Yeah, absolutely.
Fantastic. So echo James's comments about hoping that you and your loved ones are all safe and well, and not struggling too much with lockdown. Before we move on to the insight into responsible investing, I thought it was appropriate to tell you a little bit more about Rowan Dartington and indeed myself. We'll just. So Rowan Dartington are the discretionary fund management and stockbroking arm of St James's Place. We're 100% owned by St James's Place since 2015, head office in Bristol, with around 3 billion worth of assets under management currently. Member of the LSC and also regulated by the Financial Conduct Authority. As the investment consultant, my role is to look after our senior SJP partners and their clients in the north of England. A bit of an insight, as James already mentioned, I've got just over 30 years wealth management experience, both in the UK and internationally. More importantly, I'm also the father of 3 children who are 23, 21 and 19, and constantly challenge me about what impact my role is having on society and on the world that they're going to inherit. So it's an area I'm particularly passionate about. So let's now consider why we should all be thinking about investing responsibly. This slide is quite terrifying when one considers what the impact of the human race on the planet over the last 60 years. The second half of the 20th century, as we see, is unique. If we focus on a couple of the areas there, world population, growing unbelievably quickly and continuing to do so. Estimates are that although we're 7.7 billion now, by 2050 we're likely to be closer to 9.5 billion. Urban population is growing at such pace. There's 1.5 million people move into cities in emerging economies every week. That's 1.5 million people a week moving into city centre, living within the emerging economies. If we look at primary energy use, again, the rate of acceleration is unbelievable, as is fertiliser use, transport, including airlines. And the negative side of that is that we've seen nitrous oxide and carbon dioxide almost go off the scale in the past 50, 60 years. Surface temperature and ocean acidification, again, increasing at an unbelievable rate. And we're all aware of the tropical forests loss. It does, and I've told this story many a time, remind me of my grandfather, who was born in 1900, and he couldn't have been more proud when I turned up in 1986 in my first car, and he was absolutely so proud that his grandson had been able to buy a car of his own. Looking what happened in my lifetime now, I'm not so sure he'd be very proud of what's happening to the planet. I think it was Sir David Attenborough, and I may misquote him here, but said something along the lines of, there's one species who's created these problems, and it's the same species that can fix it. If we move on to the next slides and look at the problems we're facing, average annual temperature is increasing at a rate of knots. The key impact there is the natural and human factor. Whilst nature has an impact, it's not until we have the human element that we see the real challenges there. It's interesting to note that 5 of the warmest years since records began have occurred in the last 10 years. The atmospheric and carbon dioxide concentration due to CO2 emissions from the burning of fossil fuel is off the scale. If we look at the cycles throughout this chart goes back 400,000 years. And we've been able to establish that there is a cycle of CO2 increases. But when we look at what's happened since 1950 and we see where we are currently, there's absolutely no denying that this isn't a natural cycle. This is all to do with the impact of the human race. When we move on to current consumption levels, again, this is something to make us all sit up and pay attention. As we see on the right there, by 2050, if we continue to consume at the same rate, we'll need 2 planets. Think about that. The measure now, based on last year's data, 2019, says that by July each year, we've used up a year's worth of natural resources, which in turn means that humanity consumes at a rate of 1.75 times faster than the Earth can regenerate. Even more frightening is if we were all to live like the American people, we need at least 4 or 5 Earths to sustain us. So, where are we now? We're in the midst of what we're calling the 6th Industrial Revolution. Going back in time to the 1700s, where we had the original Industrial Revolution, then came steam and railways, steel, electricity, heavy engineering, oil and automation and mass production, and the IT revolution of the 80s and 90s. The new revolution, as with every revolution, creates opportunity. When we look forward into the businesses and the industries that will grow and blossom in the new world, we can take into account electric vehicles, new battery technology, sustainable food sources, smart metering, recycling, solar and wind energy production. We also use artificial intelligence to increase efficiency in farming. We look at circular business models where they aim to be 100% recyclable, and we take into account the big data, being able to collate activity and movement. And we've seen this recently in the updates on what's happened with COVID, where we can monitor how much people are moving and actually use that data to protect ourselves. So what is responsible investing? Well, there are 3 elements to it. Ethical investing is something I'm sure we're all familiar with. It's often called the purest form of investments from a responsible perspective. This is about negatively screening the things we invest in. So taking out industries like tobacco, alcohol, weapons manufacture. Another theme within responsible investing is ESG, or environment, social and governance policies. And the third is impact. Impact itself is being able to invest in companies, enterprises that have an absolute impact on positive social change. So why should we consider investing responsibly? Well, initially you consider it because you want to reduce your own impact. We're all taking into account what we do these days, and I think COVID has made us even more aware of the impact we can have on the planet. I've sat day after day looking out in my garden with the sun shining when it was, and the increased number of animals I see, the clear blue skies. We're in the flight path to Liverpool Airport, so the lack of airplanes, it's been absolutely incredible. And we're all making changes, we're all adjusting. The increase in vegan, vegetarian options in shops and restaurants is amazing. We're all recycling more, we're all aware of our carbon footprint, and we're all making informed choices on what we buy. In fact, quite recently I've discovered that one of the challenges of living in lockdown is that I end up getting all the post as the postman delivers it, and I found an early Father's Day present had been ordered by my son, and I've got a pair of carbon neutral running shoes which are quite amazing. They're made of eucalyptus tree fibres, sugarcane midsoles and a castor bean insole. Absolutely amazing. More importantly, whilst we all make those changes and we can have an incredible impact on the planet, a recent survey has proved that actually moving your pension savings into a responsible investment portfolio can increase your impact by up to 27 times. We also need to make changes. As investors, we can collectively push industries and companies to change their behaviours. 2 years ago, Rio Tinto, the second biggest mining company on the planet, was the first to stop mining coal. BP now refer to themselves as Beyond Petroleum and have promised to become net zero carbon emissions by 2050. If we then look at investing in the future, we're looking at to invest in companies of the future, not companies of the past. Those companies that are prepared and committed to delivering on the United Nations responsible investing guidelines. And indeed, by investing in those companies, a Harvard business study has shown that strong ESG companies outperform their peers by approximately 4.8% per annum. So there are different approaches when we come to responsible investing. Restriction screening, as we mentioned before, is one of the purest. That takes out any companies that we don't want to, or any sectors that we don't want to invest in. Responsible investing, again, they're investing in companies that adopt the United Nations Sustainable Development Goals. Thematic exposure, following a theme of investment around responsible consumption perhaps, infrastructure, climate action. And finally, impact investing, where we focus again on enterprises that can have a significant effect and social impact or environmental impact. So fair and free education, clean water and sanitation, renewable energy. When we build our portfolios for our clients, we consider all approaches. We try to make it as pragmatic as possible and take into account all the requirements. So when it comes to building the portfolio, we will start off by negative screening. We'll take out those that damage the environment, test on animals, alcohol, manufacturers, gambling, tobacco, pornography, etc. But we also positively screen. We look at companies and organisations that have positive impact on water management, on environmental services, clean energy, sustainable transport, resource efficiency, and again, education. Our investment approach has three focus. There's a broad approach, as I say, we're pragmatic. We're looking to maximise the different approaches for our funds and companies, and we have our in-line house view before we review what we invest in. We start with bottom-up research. That's at fund and stock level. We meet with the managers, the fund managers, we meet with the boards of directors of the companies. We review them against our ESG guidelines, and only then we'll consider putting them on our approved list. Equally important is the top-down decision. Asset allocation is the key driver of returns and risk management in a portfolio. So our asset allocation and investment committee define our house view and our model of how the portfolio should look. Our analysis and our analysis team provide the objective analysis for us based on the ESG credentials of the investment funds or the stocks. We also employ an independent ESG research company to then review our own research and give us additional due diligence. Our team meet with the managers when researching what we want to invest in. We'll meet them face to face, understand exactly what their investment themes are, their ideas, etc. Explain to them what our ESG credentials are, and then once we agree, we move forward. The review process is regular and thorough. We'll constantly monitor the funds we invest in and the companies we invest in. And we also look for opportunity, because this is a very fast moving environment. And as we've seen, if COVID has taught us nothing else, that the development of new companies, new processes, new procedures can happen overnight. We're sitting now talking to, I don't know how many clients in the northeast of the country and all over. I'm sat in Liverpool. If you'd have asked me 6 months ago, could I have envisioned this? Absolutely not. But technology's come on so far, and we're all becoming very competent at using it. So, the investable themes. One of the challenges of pure ethical investment is that the universe of investment opportunities is quite narrow. But when we look at it from a responsible investment angle, we can see that in fact the investment universe is enormous. From waste management, sustainable food, energy efficiency, lighting, healthcare, education. As I say, the opportunities are vast. So when we look at a portfolio, it's important that we make it as diverse as possible. Diversity ensures that we reduce risk and volatility within portfolios, but also creates more opportunity for growth. Our portfolios are all managed in a balanced or medium risk profile. And as you can see, we diversify across sectors, asset classes as well. It's interesting when we compare our portfolio to a standard medium risk FTSE or share style portfolio, the areas in which we're under and overweight. Overweight in technology, financials, telecom, consumer services, healthcare, and industrials. Vastly underweight in oil and gas, basic materials, consumer goods, and utilities. It's interesting to see how our individual portfolios have performed at the height of the crisis. We were out of the sectors that suffered the most. We don't invest in airlines, we don't invest in mining, don't invest in oil and gas. So we were quite resilient when the actual crisis hit. Portfolios then constructed using a modern portfolio theory around asset class allocation. So we use UK equities direct, so we hold individual stocks and shares in the companies we believe in the UK. Our research team in Bristol and London can monitor those very closely and do due diligence on those organisations at a very high level. To access global equities, global fixed income and alternative investments, we will use collectives that will give us a widespread approach to those sectors. If we then look at the overall services, we have a collective portfolio service, ideal for ISA investments and the like, does focus just on collectives on that point. We also offer a bespoke portfolio service. And again, to bring this to life, this is an individual portfolio per person. These are not funds. This is not a model. This is an individual portfolio which we can tailor to a client's specific needs. Using myself as an example, with almost 25 years working for financial institutions, banks and investment houses and the like, I've accumulated quite a lot of financial stocks and shares. When I created my own pension portfolio using the ESG Rowan Dartington structure, I asked them to avoid financial. So my portfolio has no financial stocks in it whatsoever, but is still very diversified and is still able to target the returns I want within my risk profile. That entry levels are £100,000. The individual portfolios, and these really are bespoke, tailor-made portfolios for clients with specific needs, ideas, and goals. Again, we can tailor-make an individual portfolio and monitor and manage that for you. And the entry level at that one is 750,000. So to summarise, and I hope I haven't gone too quickly or too slowly for you, our responsible investment approach, its main goal is to maximise the return for you, but by doing this in the right way, investing in high quality companies who operate in a diverse range of industries and businesses and work towards addressing global environmental and social challenges. Our research team and our second level of research using a third party is second to none, but we do all this with a risk tolerance agreed with you in advance of building the portfolio. And we hope to help you achieve your long-term investment goals by investing responsibly and receiving the returns in the right manner. The investment team, headed by John Bettridge, our Chief Investment Officer, extensive experience throughout his career. He was ex-head of Prudential before joining us. Tim Cockrell, the investment director responsible for this sector, has been in the industry for, again, around 30 years, but has been operating in responsible investments for over 25 years of that. And the team there of analysts all work closely with Tim.
Moving on to the next question, you've mentioned that there was a traditional ethical fund approach that many companies had adopted. So what is the major difference between clients that have invested in ethical funds and perhaps this new ESG approach?
Mm-hmm. So ethical, as I mentioned, is probably the purest form of investment from a responsible point of view, in that it just simply negatively screens out any companies with or funds that have unwanted elements, if you like. But that universe is limited. When you take out entire sectors, it reduces the availability of where to invest, and it can actually increase the risk on the portfolio. We focus on three central factors in measuring the sustainability and the impact on society of an investment in a company or in a fund. From an environmental perspective, our concerns are around climate change, sustainability. From a social point of view, we're looking at diversity within the business, human rights, consumer protection, animal welfare. We won't look at companies, organizations that have 0-hour contracts. And from a governance point of view, we look at the management structure of the organizations, the employee relations, the employee compensation, the diversity on the board of directors and within the workforce, and increasingly importantly, the executive compensation. So we take a much wider view than a purely ethical, which again gives us that ability to create quite a diverse portfolio with a significant reduction in risk, and again an opportunity for growth on that side.
Great, so a much more detailed approach to actually adopting these strategies. That's very, very good. And then the final question we've got tonight then from a client is understanding that there's going to be a greater level of investment specialist input. How does that reflect on any charges for this particular strategy?
Good question. I think it's natural to assume that with added research that then costs would increase. But in fact, we've been championing this style of investment for quite a while now. Our teams are very efficient in what they do. As I say, we even employ a third-party independent review to double check what our measurements are. But what we do, we deliver all this at the standard price of our portfolios, so there's no increase in charge whatsoever.
Great. Okay, that's very useful. Thank you very much, Dominic. Really, really appreciate you spending some time with us this evening. I hope you've all got something out of that. As I said, with the world that we're living in today, more and more people are reflecting on the decisions that they're making, and clearly part of their investment journey can have an impact on the greater world. So just say goodbye to Dominic there. Thank you very much, Dominic, for joining us.
Thanks very much.
Have a very good evening, and we'll catch up with you soon, Dominic.
Cheers, thank you.
So it just leaves me to say we hope that you continue to remain safe and well. Do look out for further briefings that we're going to be running over the next weeks and months through this new technology. If you do have a particular topic that you'd like us to discuss or present on, please do let us know at the usual channels. But it just leaves me to say I wish you all a very good evening, and we all hope to catch up with you very soon. Take care. Bye-bye.